Commentary I've come across suggesting that perhaps yesterday's rally was slightly overdone and there's no reason to support continued strength at this stage. Do you share that sentiment?
I would not say no reason. You know, the Reserve Bank's quarterly bulletin, which came out yesterday, painted a reasonably positive view of the outlook for the economy. We've got to remember also the IMF just released their latest growth forecast, looking this year up 4%, slightly better next year. You know, that's quite positive, I think, in an environment, a world environment, which is pretty downcast. So, no, I think there is a lot to go for, but individual stocks may be difficult to find representing good value right now. The fact that they've come off 1% and close to 1% throughout the market is fair, I think, as a view on the economy right now.
Of course, what had fueled a bulk of that turnaround that we saw yesterday was the Greek situation and all that played out there, in that we did have the Prime Minister seeing a vote of confidence being passed, and that buying some time for now. Big question is, how much longer can stimulus and funding be sustained, whether it be in Europe or the US?
Well, certainly starting in Europe, going to Greece, it's going to be difficult. Just looking at the huge amount that Greece has outstanding relative to the size of their economy. Sovereign debt is 150% of GDP and climbing. Boy, that's an insurmountable hill that it's forming there. And I think all they can do is put off the evil day as to when there's going to be some major reconstruction of Greek debt. And that's going to cost bondholders a bit of pain, I think. In the meantime, the euro is taking it in its stride. It's holding up pretty well. There had been a thought that if there was a vote against Papandreou, it would hit them, but it didn't. On the other hand, there's nothing to say that there's a permanent solution in sight. So I would say really pretty much as they were, but the markets are not taking fright right now. That's a good omen.
What about all that's playing out in the US? Because, of course, we've got in the spotlight today that FOMC meeting, or the conclusion of it, coming to the fore. And, of course, many looking forward to the kind of rhetoric that emerges there, because, what they say is going to be very critical. Are we going to see a continuation of easy monetary policy or the end of quantitative easing?
Well, that's the challenge facing them, I think. Certainly, as far as interest rates are concerned, it must be no change. I'm sure they're going to keep their base Fed funds rate at its present record low, 0 to 0.25. They simply can't alter that while they've got this massive unemployment, low spending by consumers, and no immediate cause to believe they can accelerate the rate of recovery. But it's the rhetoric that counts. I think that they will give an indication. They can't promise, of course, that there will be more liquidity introduced into the financial sector. They won't necessarily call it quantitative easing, but they'll put it in under another name. I think that in the interest of maintaining the US consumer above water, that they will probably have to continue further liquidity injections.
And what about rate prospects here at home? We've just seen economic data filter through, coming in worse than expected. A CPI on a year-on-year basis at 4.6%. And it shows that we really can't relax about inflation and that interest rate outlook moving forward.
Absolutely, you're quite right about that. We can't avoid global influences. The cost of fuel and food, and domestically, cost of electricity. These are major items pushing up our consumer price index, and certainly are quite a lot higher than being expected. We'd been estimating about 4.2, 4.3, and it came up at 4.6. But I think that we have to get used to the fact it will accelerate beyond that midpoint of 4.5%. And our view at Nedbank is we could see it approaching the 6% mark by the end of the year. Will that push them into moving rates before then? I don't think so. They'll want to see if that is sustainable, if with the forces, particularly domestic forces, keep pushing it beyond that level. I think that they're going to look through the hump that we'll see in the last quarter of this year, the first quarter of next year, and possibly anticipate coming back below the 6% again, and that may allow them to leave rates as they are. But our view is, taking that all into contention, we'll probably get a 50 basis point move in the first quarter of next year.
Despite economic data stealing a bulk of the attention globally, we do have some companies making news today. Bidvest, one of them, announcing that it's going to buy close enough to a 14.6% stake in spring water producer Icelandic Water Holdings, and that for $13.5 million. It's a pretty small deal, but it does lend to, providing some light as to Bidvest's strategy moving forward and some of the diversity it's looking at bringing into its operations.
Yes, it's very interesting, that bid that they're making, especially considering that Anheuser-Busch, the massive American beer company, has got a 20% plus interest in Icelandic as well. So clearly it's looked on as a desirable target, and I wouldn't be at all surprised if Bidvest exercise their option to increase their holding to 20%, certainly within the foreseeable future.
Of course, we've got Icelandic Water Holdings pretty optimistic about what this partnership spells for it as well, in that it gets to leverage off the distribution network that Bidvest so proudly boasts.
Absolutely. So there's Bidvest's use of it, and also Anheuser's distribution network in the US. I think it's a very good move from Icelandic's point of view, and I think it's a positive move to see Bidvest diversifying on a horizontal basis. I think it's a good investment for them.
Let's take a look at BHP moving in line with the resources complex today, but in its own news, we've heard that union workers over at BHP coal mines in Australia will be escalating industrial action. To what extent is the market, taking cognizance of this news that's filtered through? Because certainly here in South Africa, it's all too well known, the fact that it is wage negotiation season.
That's right. It's a little different there. The objection of the union there is that they say there are too many non-union members being employed by the mine. They don't not threatening all-out strike action. What they are threatening is intermittent breakdowns in labour movements that may have 12 hours interruption and then 12 hours on and so on. So I don't think it's a question to try and stop the mine. It's not as violent as the labour movement that we see here in South Africa, but it is important. There are major anthracite coal producers into the steel industry. The sector of the industry that they provide for is over 50% of activity in that sector. So it really does matter, and I think it's something that BHP will need to be seen to be settling quickly.